So, good morning, you beautiful people. Welcome to this lovely trading day. Today, of course, is September the 12th, 1986. No, 2024. Good morning, all beautiful people. Welcome to the show. Of course, today we're going to have a look at the markets, the market structures, and I'm going to give you my opinion on everything. But please, just before we get started, please familiarize yourself with this one little thing over here. Unfortunately, I have a lawyer friend and he said I have to put this up before I do any videos, especially pertaining to finance and financial advice and so forth. So please familiarize yourself with this disclaimer. Me saying it is not good enough. I have to display it. So there it is. There's a disclaimer. Thank you. Done. All right. I can close that now. Let's start. Let's start today. Today I'm feeling a bit on the flip side, and I'm going to ask for some advice on this on the comment section down below. Please just comment. Now, for those who don't know, I'm a South African musician. I'm actually a musician. That's what I do for a living. Is I have fun for a living. That's what I do. And then, as a musician, I mostly work at nights. So during the day, I do nothing. So a whole lot of years ago, I decided I need to find something to do during the day, so I don't just sit and do nothing. And I got into the trading journey. Blew a couple accounts, but I'm sure that's the same thing for every trader. If you blow a couple accounts, you want to quit a million times. But because I'm stubborn, that's just my personality. I'm very stubborn. I pushed through, and I've been a profitable trader now for a couple of years, and I am really enjoying trading as an opportunity to build my pension fund. So my goal with my trading account is I'm building up my account for my all day, basically when I retire, for my retirement. This is my retirement fund. Now, on this account, I'm trading on a demo account. When I'm trading live, I use a demo account. I never use my real account. If I get to 1 million subs, by all means, I will show you my real account, but it's not for me to show that for you, and that's not necessary, because I trade live every day. I open up this so you guys can see the history, and I'm an open book, so I don't have to show you any FX, my FX book. I don't have to show you anything of that, because the reason I don't do it, I don't see a point in it, because people fake shit these days so much. You can start a website and make it look exactly like your FX or like my FX book, and I can create all sorts of shit on there. It's so easy. It is so easy. That's why I trade live every day. Yeah, there is here and there a day that I miss, but because I'm busy, I've got a life, and trading is not a must. You don't have to trade every day. There will always be another trade. Always. The markets don't stop. They just continue on. So yeah, that's why I trade live, and I trade on this demo account. The reason I trade on the demo account also is because there is a new strategy that I want to start using or incorporating with my trading method as an extra thing. And it is this over here, where I use, when I see big movements in the market like this, big candles like this, I usually see on the 50 or the 75% on the FIB, I usually see either a 50% retracement or a 75% retracement, usually back to the zero. But I don't see this working properly on a sideways moving market, or if you're trying to do this against the trend. So if you have a long-term bullish trend, upward momentum, usually that doesn't work on the selling side of that, if it makes sense. So if you're on a long-term bullish trend, upward market, and you see an abnormally long candle, then usually you put this. That's my thinking. I haven't tested it properly yet, but that's my thinking. I want to try and maximize this because I see things like this happen over and over and over again. So basically, like let me show you quickly here. Here's a good example. Let me show it to you quickly. I want to get to that one there. Basically like this. If you see something like this happening, let me just get it properly for you guys. Basically, if you see something like this happening, so we're in an upward, because the gold is in a bullish momentum. It's working its way up. So you would use this to find buying opportunities. So basically like this, you see the strong upward momentum comes down to the 50% retracement, sometimes the 75, and then shoots up to the upside. So basically what I'm looking at, and here is exactly the same thing happening here as well. You get this sharp spike to the upside. Now you would have had it there, and there at the bottom, and look at that. Okay, so it went still up, so you would have moved this one up. See, this is a thing that I'm working at the moment. And there we go. You see a 50% retracement, and it works its way all the way up to where it started. So basically this thing, as I can figure it out, as I'm busy figuring it out, if you have a long-term bullish momentum, upward market moving upwards, you do this for buying. When you have a long-term downtrend or bearish market, you do this when prices spike to the upside or prices spike down and then comes back to the upside. So, but I'm busy working on incorporating this or working on something with this to add that to my trading style. Okay, so to my way of trading, to my strategy. That's why I'm also on the demo account, because I'm busy working on this method over here. So you put a pre-order in there, a buy order, and you put your stop loss there with your take profit below either the 25 or in the middle of the 25 and the 0, or below the 0 over there. If you want to go for a 1-to-1 ratio or a 1.5 risk to reward, you can put it there. But sometimes it does spike down to the 25. It does spike down to this one here, and then goes to the upside. So I would suggest it. But it's something that I'm working on. When I'm not live, I work on this thing because I want to see if I can. I'm doing a couple of back tests because I want to see if I can incorporate this into my trading style. As soon as I got it figured out, I'm still busy figuring out some stuff, still seeing some stuff happening. So as soon as I got a nice, handle on it, I'm definitely going to start incorporating that into my trading method. That's the reason also I'm on the demo account, because you never test a new strategy on your real account. That is just stupidity. You don't do stuff like that. That is just, you don't do it. And so someone decided also just to start trading live. Yes, I have got a couple of videos out there and so forth, but I decided to go live because I see a lot of these trading gurus putting out videos and selling courses. There are a lot of videos that only sell you courses. There's no live trading involved, none whatsoever, nothing whatsoever. They're only explaining patterns or explaining movements in the market and so forth, and then ask you to buy a course. Where honestly, the reason I'm pushing back on that is because I want to save new traders from making that mistake. Making a mistake by buying a course by a so-called profitable trader that never trades live. I mean, yes, he might go live here and there, but I think all us real traders, and I want you to subscribe and share this video to all the traders you know. especially the traders on YouTube, or those that aren't on YouTube, we need to start fighting back. Us real traders, we need to start fighting back against these so-called trading gurus that are capturing new traders coming into the market on a daily. On a daily, there's new traders. Every day, there's thousands of new potential traders looking for options, looking at trading, and then they stumble across these so-called gurus. They see, oh man, this guy's flipping good. I need to buy his course. Then they use the last little bit of money that they have. Because remember, people start trading because they're looking for other methods to either supplement the income or create an income. That's why they're there. It's because they are already suffering. Now, a lot of new traders come across these so-called gurus, and then they buy the course. Some of the courses are like $400, $397, $350, $250 US dollars. That is a shitload of money. Then this poor new trader used the hard-earned cash to buy this so-called course, which is bullshit in any ways, which is BS. Don't do that. It's stuff you can find on the internet. It's stuff you can find with a normal Google search. You can find the stuff that they are selling to you. And then they capture these new traders and they sell them this BS, this load of crap. And then these new traders buy that course, study that course, and then open a new account with their real money, thinking that they are now going to make millions. And then what happens? Those courses never work. Those trading styles seldom work. They lose all their money that they've put into the market. And they lose hope and they lose faith. And it breaks people. It really does break people. Those people should be ashamed of themselves. Those so-called gurus selling all these courses, you should be ashamed of yourself, taking advantage of vulnerable new potential traders. You should be ashamed of yourself. You should be ashamed of yourself for doing that. If you are a profitable trader like you so-called claim, trade live. Teach the people for free. Because why do you need to sell people stuff if you are already a profitable multi-million-dollar trader? If you are such a good trader, why? Why do that? Why? You guys should be ashamed of yourself. All those new channels popping up left, right, and center. You should be ashamed of yourself, man. You should be ashamed of yourself. You are absolutely a disgrace to humanity. That's what you are. You are a disgrace to humanity. Just wish that YouTube will just share this video to freaking everyone so I can try saving these people that are just these new potential traders that are just looking for a way to make an extra buck. YouTube should block those speaking people because that is scams. Those are scams that they are running. It's a scam. They are scamming people. Shame on you, so-called trading gurus. If you are a profitable trader, like I am, I trade live every day. Almost every day. Like I said, if I'm busy, then I don't. But whenever I'm on the markets, whenever I open up my trading account or my trading thing, I go live. And I do it for free. I'm not selling you anything. I'm not going to sell you anything. That's not the way I work. I'm trying to show you my way of trading, which is a profitable way of trading. And hopefully you can find value in it and you can better your life. I'm never going to sell you any courses, nothing whatsoever. I'm never going to do that. All I want for you is to avoid losing money to those scam artists and start trading the right way. Start doing it the right way. Start from the start. If you start when you start trading and you start doing it the right way, in the beginning of this video, I showed this account. I opened up the history and I showed this account. So you guys can see, as it's going now, my average is about 4% growth a month, which is good. Do not believe these people that tell you can make 50%, 60% gains in your account every month. By all means, yes, you can. It's not impossible. Yes, you can, but not every month. Believe me, somewhere along the line, you're gonna stumble and you're gonna fall hard. Now, recently, Don Vo. Go type in Google Don Vo, or type on YouTube Don Vo. See how that guy has just lost everything. Well, not him. He's a rich person now. There might be some scams involved there as well, but I don't have any info. I don't have any information backing that. But that's how easy it is to lose money. The more you risk, or the more you want to make, the more you have to risk. Just remember that. And the more you risk, the more you have to lose if a trade doesn't go your way. I've seen traders blow multi-million-dollar accounts. I've seen traders lose everything they've worked for years because of that mentality that I need to get rich quickly. I need to make $60,000 a day. I need to make $10,000 a day. Don't set yourself a goal to say, I need to make $100 a day. You'll get there. Yes, you will get there, and you'll actually get above that. But don't say to yourself, I need to make $100 today. Because then you're going to take unnecessary risks, and you're going to completely discourage the word trading, and you're going to be gambling. There's a difference between trading and gambling. You have to remember that. Okay, so that's why this YouTube channel is there, is because I want to try and save as many new traders as I can. So I'm asking you to help me grow this little channel. Help me grow this channel. Help me start a community. If you have any advice for me on how to better the YouTube algorithm, or look, I'm not a technical person. I'm not a computer person. I don't know how to optimize stuff and what. I don't know. But if you have any ideas, leave it in the comment down below and just help me to grow this YouTube channel so we as a community can try and save as many new potential traders as we can from falling into the trap of these so-called trading gurus selling you BS courses. Because that's what it is. It's a ball of crap. That's what it is. But anyways, I'm not gonna rant all day. I'm just here humbly asking you guys just to help me. That's all. It frustrates me when I see these gurus with hundreds of thousands of people following them and buying their courses, and it's utter BS. It frustrates me that they take advantage of people like that. I don't know how those people sleep at night. I don't know. I don't know. I don't know how they sleep at night. Anyways, that's my rant for the day. I'm not going to continue on. But there is another thing that I want to ask, and also for you guys to comment on before I get to the markets. We'll get to the markets now. Being a passionate person and a person of religion, I'm very religious. The first thing I do as I open up my eyes in the morning is I pray and give thanks to God. I do that, our Lord and Savior, Jesus Christ. I do that. But I want to ask you guys if we should do that in the mornings before we start trading. Just do a little prayer and then start trading for the day. That's just a thought, just my thought. Let me know down in the comments below. Then we can start doing that in the morning. So as I go live, we do our prayer and then we start trading. Just let me know in the comments if that's a good idea. All right, let's get to the markets. Enough ranting and enough getting my frustrations up with those people. Let's get to the markets. All right. Let's start from the start here. The Euro USD. Let's get to that. So I know there is also news today. I think it's a PPI today. Yesterday was a core CPI. Today is a PPI on the USD. So we'll have to see what that does to the markets. And yeah, we'll just see after this. And then, of course, the rate decisions is also coming. I think next week the rate decisions is coming for the US dollar, and that's going to be a big market mover as well. The rates decisions. So for this month, there's a lot to come, a lot to happen, which is going to absolutely move the markets. But I've got a trading strategy, and I stick to that strategy religiously, and that's why I'm in the market. Okay, so where we left off yesterday, I told you guys that as soon as I see a break of that low there, and there we saw the break of the low, I will move my stop loss from there to there. So what was it last night? I just opened up quickly just to see where everything is, and I saw I did a break, so I did move it down. Yes, I didn't go live because it literally is going to be like 5 minutes just to move. I didn't do anything else. I did tell you guys as soon as I see a break there, I'm going to move my stop loss down, and that's exactly what I did. I saw the price did break there, so I moved the stop loss down. So I'm not in profit yet. Yes, that is a profit. Yes, you will say I'm in profit, but as long as my stop loss is above my entrance zone, I'm not in profit yet. Even if this is $100 here, it hasn't formed a new low, so I can move my take profit down into profit. So I'm still not on the Euro USD. I'm still not in profit. Yes, my risk is now only $5. Yes, it is. So the risk is lower now, but I'm still not in profit there. The pound USD, I am in profit with the pound USD because it did break that low there. So which means this is now my recent swing high over here, and this is now the new low. As soon as I see it break a bit more, then I will move my stop loss to wherever. As soon as this low gets broken, I will move my stop loss to wherever this swing high is. So the pound USD, I am in profit, small profit, $15. I'm in profit there. So it's a very small, but that's trading, systematic wealth. You just have to know trading is systematic wealth. So, and then I'm just going to, do a trailing stop as we go along with this little bit of a downward spiral over here. That's for the pound USD, and I'm hoping for the pound USD to get to the 1.2875. Oh, is it 76? Yeah, 767. I'm hoping for pound to get to that level over there, where that support is over there. But it's trading, so it never goes just the way you want it to go. You have to go with the flow. All right. So as for the gold, now I did see that there is I call this a middle trend line, or how can I say it? Invisible trend line that I mark out there. So basically it's a middle trend line where the trend follows on top of it and it breaks through it and then follows the bottom of this trend line. So majority of the times when you see a trend line and trend line gets broken, price start going down to the downside. But sometimes it happens that a trend line gets broken but still gets followed, like it does here. You see there it started, it got respected there, it broke through there, but then still got respected there. And I don't see a lot of I haven't seen anyone explaining this trend line. That is actually a very powerful tool if you use it right. A very powerful tool because it will give you a little bit of insight upon what price action is going to do. Usually when it breaks through and it follows a trend line, it means that there is usually, like this one here, I'll explain this one. If it comes from the top, breaks through and then follows the bottom, and I'll explain, you can't make another trend line there, because if you make it like that, yep, you can see there as well, but they did a little bit of a pop through and a pop up. Yes, you can do that, but you never know exactly. Now that one wasn't respected. I like doing these middle trend lines because it gives me a more or less of an idea that yes, price is gonna pop down to the downside. And it happens quite often when you see these middle trend lines. There's not one there, but every now and then you see these middle trend lines happening where price breaks through from the top to the bottom and still respects the trend line, then you know price is getting ready for a big downward spiral. So as it comes to the gold now, I do think we're going to see a drop down to the lows here as well again. I want to reverse out. I do think we're going to see a drop right back down to the $2,476. That's my opinion. The reason I say it's not going to break through yet there, and this is just a reason, is we are expecting some rate cuts coming from the Fed. So if you do see rate cuts coming, it means the dollar will grow and the gold will go down. All right, so I'm trying to explain things in a manner so that, of course, my trading channel is for new traders and, you know, for intermediate traders. So I'm trying not to use the correct terminology for these things, because when I started trading also, you know, the videos I saw was like people using all these fancy words, and I had to go and freaking look up in Google, what does this mean? What does that mean? What does that mean? And it takes time, and we don't need to do that. Now, as for gold, I do think that we won't see a breakthrough to the upside. We might see a little bit of a pop up to the upside. Let me just go back here. We might see a little bit of a pop up to the upside. Reason being, there's a lot of liquidity there. I just want to say this. I just want to insert objects, rectangle. Right above here is a lot of liquidity. There's a lot of selling going on there. So there's a lot of sell orders here. So, which means if price, this is now my forward thinking, looking at the market. So if price, I'm just going to make this a different color so we can see it properly. I'm going to explain this to you guys now. Let's make it yellow. Yes. Okay. So if price pops in here, that to me will change my trading style a little bit. I'll do something that I don't do very often, and I will do a sell. I won't wait for a breakout structure, retest, and a second breakout structure. I won't do that, because I know from what I can see here, there is a lot of liquidity. There's a lot of money here. A lot of sellers are here and they've got their stop losses there. So I know, number one, price action always hunts for liquidity. Price, because there needs to be money in the market to make money. So what a lot of the big institutional traders will do is they will chase the price up to this level over here, grab all that liquidity, and then shoot back down to the downside. So when you're reading the markets, you have to read it logically. You have to think about things logically. So logically, this tells you that there's a lot of people selling here. As you can see, price doesn't want to break through there. Price doesn't want to break through there. So there is a lot of sellers over here. A lot. So if there's a lot of sellers over there, it means that there is a lot of liquidity, a lot of money there, because a lot of these people are day traders with little to no money management skills, and they've got tight stop losses. So you can just imagine how many stop losses, how much money is here. You can just imagine that, how much money is here. And price will always chase liquidity. It's been chasing that liquidity zone there for a while. It's been chasing it for a while. So what will happen as price gets here? I personally am going to put in I'm actually going to put a pre-sell order in now. I'm actually going to do a pre-order right now. So what I'm going to do is I'm going to put a pre-order. Pop it in there. Where's that one of the 2,532? I'm going to put a pre-order in there. And a stop loss right above that level. The 2,540. 2,540. I must just check quickly that it doesn't go past my 1%. No, it doesn't. Okay, so I'm going to put a pre-order in there. Actually, I'm going to actually widen the stop a little bit more. Let's get it up to there. On the 50, so I only risk 0.5% of my account. Out of there, I'm gonna just remember to do it as well on here. I'll do it now. Now, when I'm done here, I'll just do it on my account as well. I'm gonna just remember. So what I'm gonna do is I'm gonna put a pre-order in here because I anticipate, and probably I'm just gonna put a stop loss. I'll take profit as well. I am anticipating price to go into that zone, collect all that money, and then take a massive dump down to the downside. Basically, I think we will go right back down to the 2,400. Let's be brave. Let's say price will come right back down to where this level is. Let me just take this thing away here because it's in the way of my trading, of what I'm doing. So price, let's be adventurous. Let's be adventurous. And look today's date. I'm just going to put it up there again. Today is Thursday, September the 12th, 2024. All right. So I'm anticipating. I don't do this very often where I put a trade in, without any confirmation. But because logically, and this is just logically, I see a lot of liquidity, a lot of money here. So logically, I know that price is going to chase that liquidity, grab all that money. So now there's lots of, I'm talking about a heavy load of money in the market, and then the sell-off happens. Because there is no market, there is no money in the market, so now the sell-off can begin. That's my thought process. That's what I'm anticipating is going to happen. Not to say that it is going to happen, because trading is trading. You can only do what the market is telling you, but sometimes it doesn't work in your favor. You just have to know that trading is risky. So I have put a pre-order in there with the thought process that is going to grab this liquidity over here and then take a nice dump down to the downside. That's what I'm thinking. All right. Especially if rates cuts are coming. The market movers are probably going to try and push this up to there as quick as possible before next week. They will probably want to try and get to this zone. And then once the news breaks, it will just pop up, grab liquidity, and then pop down to the downside. That's my thinking on this. But as always, I can be wrong. That's just my thinking process, because I see a lot of volume here as well. So it's a nice volume push to the upside. That's cool. But that's my thinking process. Okay, so let's see what it does. Let's see if it does take 2,530. I might want to move this one down a little bit to 2,500. Let's put it on the 2,530 mark. Let's put it on there. Let's be adventurous. Let's put it on there. 2,530. Let's put it on there. Let's be adventurous. Well, I'm going to be adventurous. I'm not saying you have to be. You trade your own way. Okay, so that's my thinking on that process. And on the gold, we are still, as the gold stands now, we are still in a ranging market. Ranging market means sideways movement. So it is building up liquidity both sides. It's building up liquidity here. Let me just grab that. I just want to grab this one here as well and put it down here, and also change the color. This thing is in my way here. I just want to grab this freaking thing, put it out the way. Alright, so I'm also just going to change the color on this one. Let's make it green, yellow. So on both sides of the spectrum, on both sides, there is liquidity. And remember, price is drawn to liquidity. Price is drawn to places where there's money. Now you can see there's a lot of buying orders here, a lot of people buying here, which means stop losses are there, which means liquidity is there, money is there. So if it decides to grab that liquidity there, and bomb down to the downside, we might see it come all the way down into this and grab this liquidity as well, and then push back up to the upside. It's all depending on how long we're going to be in this ranging market. I don't foresee gold going higher than the 2,530. I don't see it going higher than 2,040, basically 2,540. I don't see, because gold has already this last couple of weeks gone up so much in price. Eventually we're going to start selling off on the gold, and that's my anticipation, but that's what logic tells me. Remember, trading is logic. You just have to be logic about things. All right, so we might see a little push up to the upside, grab the liquidity, and then a fall down to the downside. And I'm hoping actually for gold to go right back down to the 2,400 zone, right over there. That's why I've marked that over there, because that is spots or prices that I'm aiming for, basically what my logic tells me. Now when it comes to trading, that's not just to map out a plan logically, just to in your mind to get a mental map of where you think price is going to go, so you can start writing a map, start drawing a map. That's my thinking. Okay, so if price decides to go down here, it's probably going to jump up to the upside, probably go halfway to there, and then break through. But this will happen in the next couple of weeks only, I think. This will happen, and hopefully it does, that it breaks through and comes back down to the downside here at 2,400. But that's just my thinking on it. Don't say that I've told you that it's going to do that. It might do exactly the opposite and surprise me and go all the way back up to the 2,550 zone. All right, it's trading. You can only plan. You can only plan and hope it executes in that way. But you need to have a plan. You need to have a vision or a map of where you think price is going to go. So that's my forecast and my outlook for the gold so far. I think today we might just see a movement creeping up to the stop side, to 2,528. We might see it creep up to there again. And hopefully by the end of today, if we do see a lot of volume in the market, maybe after the PPI, we might see a push up, and we might see this thing happening today even. It's all depending on the market conditions, participation, and how it works. There's a lot of factors playing into these little squiggly things. I don't know what they're called. Moving. That's a joke. Okay, I know they're called candlesticks. Just I make jokes every now and then. All right, so you'll see this little squiggly thing going maybe up today, and hopefully my plan works out. But that's just a plan. If it doesn't, I only lose $50. That's why the second biggest thing in trading, or actually I think the first rule, the first big thing in trading, is you have to have money management, risk management, risk management. Don't risk more than 1% of your account. The maximum I will risk on any account is 1%. That's the maximum I will risk, is 1%. So on a $10,000 account, it's $100. That's the maximum I will risk. As you can see with the history, I'll open up the history now again. You can see they're all about, but at the $50, although my losses are at the $50 mark, some 20, 23, but at the $50 mark, and there's one losing trade that's $103. So that's the max that I will risk on a trade. You won't see any trades there, losing trades more than $100. Okay, I'm talking about between 100 and 110. It's oh, Winston, you lost $103. You said you won't risk more than $100. It's a rough figure, 1% of the account. and it's a rough figure. It's not everything in trading is not to the T. But anyways, that's my thinking process for the gold for today. As it pertains to the euro, yen, and the US yen. Now, I like trading the euro. The reason I've got euro in here is because the broker that I use doesn't charge me any commissions trading on the euro, doing euro. So I don't pay commissions, euro yen, euro USD, euro Aussie dollar, euro Swiss, euro yuan. Anything I do with the euro, they don't charge me commissions. So that's why I like trading the euro, because of commissions. Also, when you start trading as well on your real account, you are going to have to get used to a lot of different things. And that's also why I like to put wide stops, is because we'll get to that part of the trading also in videos later on. Let's just become profitable traders, and then we get to the next step of putting money into a real account and start trading on a real account. Okay, just have that mentality. You first need to trade on a demo account until you are a profitable trader and you are comfortable and confident in your trading style, the method you use, your strategy. Because when you start using your real money you've worked for hard, emotions creep in, doubts creep in like you cannot believe it. You're going to try and put tight stop losses. You're going to try but if you've been trading on a demo account for a long time and you constantly show profits, you build confidence in your trading style, your trading method, your strategy, and you build confidence in yourself. So when you do trade with your real money, that FOMO won't be that much. It won't bother you that much. Okay, so that fear, yes, there will still be fear when you put in a trade, but you'll have confidence in your trading style, your trading method, because it's been proven to work. Okay, so just be aware of that. So that's why it's important you start trading on a demo account first, and having a strategy that is, number one, profitable, and number two, consistent, and then stick to that. If you've got rules, if you've got a new trading strategy and you've got rules, please try and keep your rules to a minimum. You don't want to overcomplicate things, because the more you try and overcomplicate things, the more doubts you're going to have. Please keep a trading strategy as simple as possible. Like my trading strategy that I use is break of structure, retest, break of structure, jump in. Let me explain. I explain this in every video, so because it's so simple, I don't need an hour video to show you my trading strategy. I'm going to show you something here on this. So there was the previous low over there. The reason that's a previous low is because we saw a high. It broke that structure. So that is your previous low right over there. So price came and broke that previous low right over there. Price broke it. So there's your break of structure right over there. And then price bounced up to the upside. As soon as that happens, I take a line and I draw a line on that low that broke the previous structure, on that low. So now price is coming. Now I'm waiting for a second break. So I'm waiting for break of structure, and I'm waiting for a second break of structure. Break, retest, break, jump in. So break, retest, break, jump in. Alright, so what I'm waiting for is for this low to be broken, and not by a wick, by a candle body. Don't just go on wicks, you have to go on the candle body. So yeah, I see breakthrough, and there is the jump. So the body is below that previous low. So that tells me that is a break. So this is the second break. Once that candle jumps there, I put a pre-order, a sell. Because remember, we're busy going down. I put a sell on this line that I've put there at the bottom of the first break of structure candle, first break of structure low. I put a sell in there, and look what happens. Price came up, puts you in the market, and then you just do a trailing stop. There's another one there, and then where's that one? There. Okay, so you can actually move it down to there. Price goes down and takes you out the market. That's simple. that easy, but it's such an easy method. And did you see me mentioning anything about the volume must be there, or you must see 3 greens, or you must be above the moving average, or there must be a moving average cross, and there must be 3 doji candles, or 3 red candles, or 3 white candles, or green? No, simple. Break of structure, retest, break of structure, buy or sell. It's simple. It's so simple. So simple. And that strategy there is what is creating wealth in this account. Let me get to the history there. History. There it is. Started this account on the 22nd of July. And we are now at the 12th of September. And look where we are. $576 profit. So basically in a month and a half, $576 profit. Please, you have to keep your trading whenever you do whenever you do a trading strategy, or you work out a strategy, you have to try and keep it as simple as possible. Do not overcomplicate. I see a lot of people putting out videos of trading strategies and stuff. I've also got a couple videos of trading methods and trading strategies. But you know what? Ignore those videos. Just ignore them. You have to keep it simple. You have to keep it as simple as possible. Don't overcomplicate. Trading is not complicated. It's little squiggly lines like this, moving up and down. That's it. It's simple. It's simple. So you have to keep your strategy simple. Anyways, let's get to this one quickly. I just want to show you the euro yen. What's happening here? You can go there now, back to where you were. Alright. It's a good example to use the euro yen at the moment, because I'm at a major level of support. It is a major level of support because it's been tested so many times. There. Now usually when a support or a resistance gets tested a lot, eventually they break. Don't think because it's tested a lot it's getting stronger. No, it breaks. I explained to you guys. Now you can see there. It's actually a good example of that liquidity that I was talking about. The liquidity grab. Yes, a flipping good example. Let me just get I didn't even see this. A rectangle. So as you can see, liquidity there, it grabbed that liquidity and then went up to the upside. Jump. Did a second grab on that liquidity, and then there we go. And look at that. Just a jump to the upside. Alright, so that's what I was talking about now, that liquidity grab. Price likes to go where people put their stop losses. Yeah. So I can see basically the same thing happening here as well. We might see a grab of liquidity. Let me just put it there underneath, because that's where the liquidity zone is. That's where the money is, especially with all this buying orders being here, big orders being there. So what I'm waiting for, and here's my trading style and strategy also unfolding in front of your eyes. Now as price goes, there is the recent swing high, and this probably is going to be the recent swing low. It is the recent swing low. If this price breaks through there, then that will classify this as the recent swing low. Okay, and then that will be the recent swing high if price breaks through there. Okay, but I'm waiting for price, because I'm at a support. I'm waiting for price to go up, because we're at a support. You don't want to sell at a support level. You want to buy at a support. You want to look for buying opportunities at a support. If you want to sell close to a major support, you are going to set yourself up for failure. Don't do that. Don't do that. So what I'm waiting for in this market to happen is I'm waiting for price to break. Remember, like I said, my trading strategy: break, retest, break, jump in. Okay, so I'm waiting for price to break here, to break this here, then do a little bit of a retest over there, and then I'm waiting for a break again. Oh, not too far-ish. Then I'm waiting for a break again. Once it is broken, I will definitely put a, oh my goodness, no, it's not straight. Then I put a line there and I put a pre-order. Even if price is there, I put a pre-buy order in there. So I will put a pre-buy order in. Let me just get to that. I put a pre-order in there. There we go, right there. Let me just move this one up so you guys can see exactly what I mean. Right, so I put a buy order in already, right over there. So even if price is there, then what usually happens, and it doesn't always happen, but usually, majority of the time, and that's what you're waiting for, that's what you're banking on, that majority of the times, it comes back from there, even if it breaks through a little bit to there, doesn't matter, puts you in the market, and then, okay, so that's what I'm waiting for to happen here. That's what I'm waiting for. I want to see this happen because this is my trading strategy. Break of structure, retest, break of structure, jump in, and there we go. Alright, so that's what I'm waiting for to happen here. And when you start trading, you have to learn patience. You have to know to be patient. Don't just jump in because you think you're right. Yes, like I did with the gold, that is, I think I'm right. But because I have proper risk management, I can take chances like that every now and then. I don't do it all the time. I don't, believe in me. I stick to my strategy religiously. But sometimes, also because I've been trading so long, and I think it's true, you know, the longer you trade, the more you see things without having to physically wait for something to happen. You can see things happen because you've seen it happen so many times before that eventually you just start just doing things like that because you've seen it happen. You've seen it happen so many times before. Okay, but when it comes to the euro yen, the yen is also very motivated by the dollar. So if you get higher rates on the US dollar, higher interest rates, higher rates, people tend to go borrow money somewhere else, get money from somewhere else. So basically they go and borrow yen because the yen has got very low rates, very low rates. So which means if you borrow $100, you only pay back $102. But that's if you borrow 100 yen, and let's work at that. If you borrow 100 yen, you only pay back 110 yen. But if you borrow $100, because the rates are so high, you have to pay back $130. You see why people go for the yen? Because the yen's rates are lower. So if the rate decision coming next week is not as anticipated lower but higher, you might see the yen pick up speed. Then you might see this support over here be broken. You might see that happening because that means that the yen people are going to borrow yen again. They're not going to borrow dollar. Alright, so that part of the market, when it comes to not just chart work, but when it comes to do that part of trading, I will get to that in later videos, but let's first master chart work. You start with one thing. Don't try and jump to too many things. Like I said, simplicity. Just keep it simple. Alright, keep it simple. So let's first start with chart work, master this, then we can incorporate news events, market events, market moving events. Then we can start going into the detail of trading. Why does price move that way? Why does it go up? Why does it do that? Then we go into those things. But let's first start by first things first, master chart work. with your trading strategy, of course. And that's that. So this is what I'm waiting for to happen on the euro yen. And as it comes to the US yen, exactly the same. Because remember, these two move in unison and these two move in unison. Okay, so whatever happens to the euro USD will happen to the pound USD. Whatever happens to the euro yen will happen to the US yen. Okay, they move in unison. They move basically together. So I think it's on this one where I explained it properly. Yes. On the US yen, yeah, I've marked off a block. This that happened here, I want it to happen here as well. Like I said, markets are moved by people, and people, unfortunately, are creatures of habit. So we like to do things over and over and over again. And market is exactly the same. If you look at your charts, that's how you also, if you want to develop your own strategy, how you can do that is by just purely looking at charts and spotting things that happen over and over and over again. Once you find something that's like, I've seen this before, and if you go back in your charts, oh, there it happened again, there it happened again, there it happened again, then you've got your first building block on building your strategy. Once you find something that happens over and over and over again, there's two things you need to do. Find out why and how. Those are the two questions. Why and how. Why did that happen and how did that happen? Once you know the answer to those two questions and you've got something that happens over and over and over again, you have your first building blocks towards having your own strategy. But having a strategy that you feeling confident in, then you go to your demo account and you start working. Yes, you can backtest, but the real true test comes when you test it on a live market. Not backtesting, you do it live. Not on you. I'm talking about on the markets. You do testing on the markets and see and test your strategy until you are confident and until you see that this pays off. It's a positive strategy. Yes, it won't always work, but as long as it works more times than it fails, you have got a profitable strategy. The way I trade with the break, retest, break doesn't always work. Yeah, you can see it on my history. Let's open it up. You see, they didn't work. There it didn't work. There it didn't work. There it didn't work. It doesn't always work. But as long as it works more than it doesn't, you are a profitable trader. Simple. Keep it simple. Don't overcomplicate. Don't. And that's basically it. That's all I wanted to say to you guys. It's that trading is easy if you keep it simple. If you use logic and you just keep it simple. I don't have fancy indicators, and you won't even see a moving average on my chart. There's not even a moving average on my chart. All I have is a volume indicator. That's that. This is to show me if there's people trading. If I don't see if I see low volume in the market, then I'm like, then it gives me that satisfaction from, well, I can leave it for 5 hours or 6 hours, or I can check it tomorrow. Because I know there's not a lot of volume, there's not a lot of people trading, there's not a lot of volume. So then I leave it. And the volume indicator also just gives me a more or less of an idea of where there's a lot of buying or selling going on. So then I more or less also know where there will be zones of interest, not support resistance, but there will be interesting zones where market is gonna go to, basically to grab those people's money. Like I explained, now again, when I explained these little pieces, yes, yeah, those liquidity zones, Yeah, so that just shows me where there's a liquidity zone. If you can look at, let's look at the gold, you can see higher spikes of volumes. Let me get another block. I like my blocks. I like it. I think I must make t-shirts with blocks on them. I like my rectangles. I love rectangles. Okay, so let's move over this one. Let's move over this volume strip. I just want to move it to where the most volume is. And that's there. Alright, so you know there's a lot of volume here. You know that. So price is likely to come into the zone because there's a lot of volume. There's a lot of buyers and sellers here, as you can see with the volume. So that's what we are. Why I mostly use the volume as well to tell me, okay, there is market participation, number one. And number two, it tells you where the people are buying and selling. So you can more or less mark off the zones where they are buying and selling, and you can mark off where you think price will jump back down or where liquidity is. So you know where liquidity is. That's also a very big thing in trading. You need to know where the money zones are. Where's the money? Where are people's stop losses? You need to know that. So number one, you don't put your stop loss there. That's just stupid, because that's what price is hunting. Price wants that stop losses. They want that money there. So that's the main thing why I've got this as well here. So I know where people are buying and selling, where there's a lot of buyers and sellers, and then where not to put my stop loss. I don't want to put my stop losses where these people are putting their stop losses. No. But that only happens with tight stop, with proper money management, risk management, and so forth. So you can put wide stops. All right. If you guys want to see a more detailed video of these liquidity zones and what I look for in the market structure, put it in the comment section below. I would happily, sit and discuss things but these are all things also that you pick up. The more years you trade, the more you pick up these things. These things become obvious to you. So I don't necessarily have to make a box where I see volume. It becomes quite obvious. All right. So, and then also you after a while you start seeing where not to put your stop losses, where these liquidity zones. Where, like I explained now with you guys, this year looks to me like it should set up to be a good trade if it does get to there, because this is a major liquidity zone. There's a lot of money there, a lot of stop losses there. So yeah, it's things you pick up the longer you trade. But anyways, that's my saying for today. I'm not going to go too much. I know there is, I think it's called PPI, not CPI. Yesterday was CPI, today it's called PPI coming out. And I think 2:30. And then next week is rate decisions. So a lot of things happening in the market. But for now, I'm in these two trades. I'm just going to do a trailing stop down with this one, and exactly the same with the pound USD. I'm just going to do a trailing stop as it goes along. And yeah, from my side, please have a good trading day, good trading week. Please like, share, subscribe. Let's try and get as many people onto this channel, so we can get rid of these trading gurus, these so-called profitable traders that still needs to sell products to make a buck. Cool. Anyways, I'm not going to go there because it angers me, it frustrates me and makes me angry, and I don't want to get angry today. From my side, have a good trading day. Cheers. I'm going to put my history on again so you guys can have a look at it properly. Let's put it there. That's the history. Nice. Okay, so basically what I'm going to do is you can see the thing was started on the 22nd, so I'm just going to move it to there so you guys can still see the profit. This is unfortunately as big as I can make it. I can't make it any bigger. That's a damn shame. But yeah. And there it is. Have a good one. Cheers. I'm going to put some music on for you guys so you guys can have a good look. And I'm going to take my face away so you guys can see everything properly there. From our side, have a good trading day. Cheers.
wanted.